Hi, I'm Keon, a senior research analyst with Thomson Reuters Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, July 12th. We'll start by taking a quick look at the market activity for the week. Both the S&P 500 index and the Dow Jones Industrial Average were up slightly for the week. The S&P appreciated 0.44% and the Dow was up 0.25%. These positive returns were driven by dovish statements given by Federal Reserve Chairwoman Janet Yellen. She stated that the Fed will be taking a closer look at inflation data moving forward, as it's been weak as of late. If the softness continues in the data, it's possible that the Fed could push back their interest rate hike forecast that they've given previously. The street reacted well to this news. The markets were up and bond yields were lower. All right, let's turn our focus back now to the fund flows activity for the week. We'll start by taking a look at our macro groups. All four macro groups experienced net outflows for the week. Equity mutual funds saw $2 billion leave. Taxable bond funds saw approximately $231 million in net outflows. Muni bond funds had $163 million in net outflows, and money market funds had $1.2 billion leave their coffers. We'll take a closer look at each fund macro group now, starting with our equity funds. Looking at the mutual fund group again, the $2 billion outflow was its third straight weekly outflow. Once again this week, we saw domestic equity funds dominating the net outflows. They had about $4.6 billion leave, while non-domestic equity funds took in just about $2 billion. For the year to date, it's more of the same. Overall, the group, the equity mutual fund group, is down just about $20 billion. They have net outflows of about $20 billion. All this coming from the domestic equity side. The domestic equity has seen just over $40 billion leave, and non-domestic equity funds have taken in $20.7 billion for the year to date. Let's move on to our equity ETF group now. For the week, the group had net inflows, approximately $5.5 billion in net new money. For the year to date, this puts them at net inflows of just over $144 billion. Major contributors this week on the net inflow side were PowerShares QQQ, took in $4.4 billion in net new money, and the iShares Core MSCI EFA product had about just short of $2 billion in net new money come into their coffers. On the outflow side, we see the Deutsche MSCI EFA hedge product had net outflows of $1.1 billion. Let's move on to our taxable bond fund groups now. We'll start with the mutual funds. As mentioned previously, they had net outflows of just about $230 million for the week. This takes down their year-to-date net inflow to just over $101 billion. Big players this week was the Core Plus Bond Funds peer group and the Multi-Sector Income Funds peer group. They had net inflows of roughly $745 million and $408 million. For the year to date, the peer groups that have taken in the most net new money have been core bond funds at just about $33 billion and multi-sector income funds, which have taken in just over $24 billion. Let's move on to our taxable bond ETF group now. This group also had net inflows last week. They took in about $1.2 billion. This pushes their year-to-date gain to $60.5 billion. In the weekly data, we see the iShares 20-plus year Treasury and the iShares Core U.S. Ag products with the largest inflows, roughly $580 million and $530 million respectively. And on the negative side, on the outflow side, is another iShares product, the iShares JP Morgan U.S. Dollar Emerging Market Bond product, had just about $550 million in net outflows. This takes us to our next group to take a look at, the Muni Bond Fund Group. Outflows for this group as well last week. They saw about $163 million leave their coffers. This reduces their year-to-date gains to $10.6 billion. Major players last week were intermediate muni debt bond funds, which saw just about $189 million leave. And high-yield muni debt funds took in just short of $100 million for the week. For the year-to-date, high-yield muni funds once again has been taking in the most net new money, just about $4.9 billion, while intermediate muni debt, contradictory to this week's data, has also been a major player in net inflows for the year to date with about $3.1 billion in net new money. Let's move on to our last group to take a look at now, money market funds. Net outflows for this group also last week, about $1.2 billion left. This pushes their year-to-date net outflow to just over $95 billion. Last week's activity, the largest outflows came from the institutional U.S. Treasury group, about $3.7 billion, while the largest inflow was the institutional money market fund group, about $2.5 billion. For the year-to-date outflows, the lion's share goes to the institutional U.S. government money market fund group, which has seen over $75 billion leave their coffers. Well, that wraps up this week's report. If you'd like to take a closer look at the data, please join us at our website at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.